No, not yet, but we're getting close. We're fibrillate right now, trying to figure out what the earnings next year are going to look like. And so every time you have a rally like this, we've had extended rally, multiple days now to the upside. It's because the belief in the market is that the Fed is finally going to slow after this next 75 basis points and kind of wait and see what happened. And we got a little signal from that up in the Canadian market where they decided not to increase the sort of broadcast amount. They went 50 basis points instead of 75, showing an idea of a moderation, if you want to call it that. Now, normally we do not take signals from other countries, but Canada, being the giant trading partner it is, just north of the border, it's the first time in decades I've ever seen anybody wake up and look at what the Bank of Canada was doing, and that's what happened this week. And it actually forwarded this theory, this philosophy that maybe the Fed is going to pause.
So you heard Kevin O'Leary, a very popular investor who has been successful for so many years with his future optimistic strategies. And he believes we are not very far away from bottom, but the condition we are seeing now is certainly not that. Kevin O'Leary has further deliberated the situation of Bitcoin, cryptocurrencies, NFTs, US government, global inflation, and CPI rates, along with discussing the historic comparison with current market situation. So if you don't want to miss anything from his prediction and analysis, watch the video until the end, and do subscribe to the channel if you haven't already.
You have to remember the most hated man on earth is always the chair of the Fed, regardless of who they are, man or woman. Everybody hates the Fed. Everybody second guesses the Fed. Everybody says they're doing the wrong thing all of the time. You can't make anybody happy when you're the Fed chair. And that's exactly what's happening here. He's trying to, in this case, in Powell's case, engineer a soft landing, which is near impossible. No one's ever seen that happen. However, data coming out this morning proves that we are not yet in a recession. Everybody kind of knows that just by the feeling of the consumer being so strong. And so for the first time in a long time, people are thinking, wow, maybe he can pull this off, and we would know sometime in Q2 next year that he could actually bring in a soft landing, slow down inflation. After all he needs, the Fed in aggregate needs, the board itself needs, is some indication that the rate of increase of inflation is slowing. That's the key right now. And so we don't have that quite yet. There's a narrative in the market, and I want people to understand this and how CPI data is gathered. So much, 40% of CPI data is housing, shelter. And shelter is a very slow index, and so it takes up to 18 months to actually have an effect on it. But people in different markets are starting to see rent rates slow or flatten, or housing prices flatten. So really what we're probably doing in the CPI number right now is over-reporting inflation. And that narrative has been coming in with Professor Siegel, who's been talking about this ad nauseum for the last 6 weeks. But he has a point. You can't deny the fact that 40% of CPI is shelter. And maybe we're over-calculating it. Now, people do this all the time, and I'm guilty of it right now, trying to say, well, here's why we shouldn't believe this number. It's just more Fed beating and more Fed hating and more, telling the Fed what to do. And the truth is, they don't give a damn. They don't listen. They have their own mandate. They're going to do what they're going to do. And I say that'll be 75 basis points coming to a theater near you in the next few days. And I'll give you an example over the last 3 weeks. And so if you looked at 2020, which was an extremely volatile year as we started to understand what COVID was doing to the economy and the global economy, the entire returns of that year, which was actually a good year for equities, happened in 19 trading sessions. 90% of the returns happened in 19 trading sessions. That's 8 hours times 19. Wow. And if you were not in the market that day when it went up 1,200 points or 800 points or 1,500 points or whatever happened in the volatility, you had no returns whatsoever. The problem is which day. And I remember in March, April, May of 2020, when I was in Miami in lockdown, and working with my team on our portfolios, our global operating company portfolios, watching us lose millions of dollars by the minute one day, and then the next day watching this reverse of it. Just an incredible amount of volatility. And having seen that movie before, I was able to tolerate it by drinking great Chardonnay and watching the sharks eat the pelicans outside of my balcony, because for the first time in 500 years, no people were allowed on the beach. And the great whites came right to the shore to eat the pelicans. It's never happened before. And that told me we're in a different time here. There's never been a time when not a single person was on Miami Beach. It was the most extraordinary scene I've ever looked at. And it happened week after week. And that gave me solitude. I said to myself, okay, I'm here watching the sharks. They're doing what they know how to do and have for millennials. I know as an investor, I can't time the market. So buckle up, drink some good Chard, OLeary Chardonnay, just selfless plug. It was my new Chard. And I did that every day at 4:01, and I just lived through that period with my team. And we accomplished that market return. Same thing about every other asset class we're talking about. You want to guess bonds? Buy a portfolio of fixed income with short duration under 5 years. Right now, on triple Bs, you can pick up 6, 7, 8% if you have fortitude. And so I am doing that. I'm trying to diversify my portfolio, and that's the only free lunch in investing. Yeah, I would say I'm very excited about going into the new year around crypto, and I'll tell you why. And I have to be transparent. I'm an investor in Circle, which does USDC. I have many positions on, but they're one of them. And also an investor in FTX, both the US and the international company, and a paid spokesperson for FTX. So with those disclosures aside, you're going to see something remarkable at Davos this year, which happens in mid-January. Each year, that global gathering has a new theme. A few years ago, it was global warming, and then it became deglobalization, then globalization. This year, you're going to see crypto at the top of the list of what is being discussed by global bankers, specifically around payment systems. Where we talk about a ACH transfer between banks or SWIFT transfer internationally, these were private sector innovations decades ago that were heavily regulated by global governments. And for the first time now, products like stablecoins could really disrupt that at a significantly faster, more productive, more transparent, more auditable, but above all, far less expensive system for transferring global assets. And so you're going to see companies like Circle headline at that event, and I think it's going to be, Davos will be you're going to see a lot of crypto-based conversation at a global level with global governments as they struggle to find some kind of policy and regulation. And that bill, the Stablecoin Transparency Act, is at the forefront of that. That is a bipartisan US bill that I think could be marked up by the time we get to that place, because it'll be after the midterms on November 8th, which is going to be significant for crypto policy. I think what will happen in the House will help crypto policy. But I think all of this is going to be really fascinating, and why everybody should stay on their toes. Lots of change coming.